Government bond yields have been a focal point in financial markets recently, reflecting global economic uncertainties and inflationary concerns. Let's delve into the current trends and factors influencing bond yields. Recently, bond yields have shown varied movements across different economies. In India, for instance, bond yields have remained relatively flat as investors closely monitor inflation data. The expectation is that inflation trends will provide crucial cues for future monetary policy decisions. This cautious stance among investors underscores the sensitivity of bond markets to economic indicators. On the global front, the yield curve has been a subject of keen observation. In the United States, the yield curve has shown signs of flattening, prompting analysts to consider its implications for economic growth and future interest rate policies. The correlation between US bond yields and those in other markets, including India, remains a significant aspect of current market dynamics. Furthermore, the recent movements in bond yields have been influenced by developments in global bond markets. For example, government bond yields in India have mirrored trends in US bond markets to some extent, highlighting the interconnectedness of global financial markets. In light of these developments, market participants are closely watching the upcoming US inflation data. Any surprises in inflation figures could potentially lead to volatility in bond yields, both in India and globally. The anticipation surrounding these data releases underscores the importance of economic data in shaping investor sentiment and market trends. Moreover, the recent slight dip in government bond yields ahead of fresh supply via debt auctions indicates cautious optimism among investors. The demand-supply dynamics in bond markets play a crucial role in determining yield movements, reflecting investor appetite for government securities amid prevailing economic conditions. Looking ahead, analysts suggest that government bond yields are likely to remain sensitive to economic data releases, policy announcements, and global market developments. The yield curve, in particular, will continue to be a barometer of economic expectations and investor sentiment. So, while government bond yields have shown resilience amid economic uncertainties, the outlook remains contingent upon forthcoming economic data and policy decisions. The interconnected nature of global bond markets underscores the need for vigilance among investors and policymakers alike.